Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com. That's where I dive deeper into these topics, deeper into these sectors, and more freely share my opinions on individual companies and how I'm positioning for this commodity bull market that we are in. So let's dive in. Let's look to see what's going on today. Share my opinions. Starting with the DXY, we have a downward move still in progress. We're waiting to see if this is a true bounce or if it's a continuation pattern where we squeeze up into a corner and drop lower. The reason I think we could be squeezing up and a potential move lower is ahead of us is because the 2-year yield is looking a little bit weak. We're seeing the long end of the curve come up a little bit today and the short end of the curve come down. And that is steepening the curve is what they call it. And it's an uninversion. The uninversion of the yield curve generally forewarns the market of a potential slowdown in the market. And people position into bonds, specifically the 2-year, if they think that slowdown could occur and if the Fed funds rate could be lowered. And they generally lower the Fed funds rate when a slowdown is observed with whatever metrics they're looking at. So we're looking at the positioning of money in the system and making decisions based off of positioning of insider information that they have of where we could potentially go. So the dollar is a relative strength indicator, and that relative strength is generated by yields and the strength of those yields against other currencies, monetary policies, and the yields that they have. And this could break this downtrend line. We've got good selling pressure before it and a pretty weak bounce on the weekly candlesticks. 2-year yield, it fell today, almost about 1.4%. It does have a wick at the bottom. We are at support. And we could, I don't know for sure, but we could break out of this pattern to the downside, losing that bottom support level. What does that mean? Well, what it means on a longer, bigger picture view is that we've broken the downtrend of the 2-year yield here. And what you generally get is a breakout and then a return move somewhere of the breakout. So this is big picture view. During this return move, it's yields coming off the floor, which is the floor is down here, and the floor is down here. Yields staying down this low for as long as they have created what is considered to be malinvestments. Malinvestments are investments that wouldn't have occurred in a different market condition when rates are higher. It's that hurdle rate that people talk about. Well, now that the hurdle rate is much higher and some of these companies are not viable companies, they will get murdered or killed off at higher interest rates. So that is what's causing a potential slowdown is the shedding of companies that may not be in existence with the rates where they are at today. So that's what potentially could be going down. There are sectors that are very interest rate sensitive. There are sectors that will struggle in an increasing inflationary environment and higher interest rate environment. And those companies are the ones that I think that will cause the pullback in interest rates. The 10-year was up, and that's still holding on to that support level. So it was up on the 10-year. We're down on the 2-year. The 2 and 10 yield curve uninverted with this large disparity between rates minus 1.4% on the 2-year and 0.8% on the 10-year. The 30-year was also higher, but the 30-year, I think, is pricing in longer-term inflation. So the longer end of the curve, people are unwilling to buy those bonds, and that is definitely seen here. But if there's a slowdown in the short term, we could see the short-term yields drop to some extent, signaling that maybe we have a short-term problem, but people are looking out further into the future saying, no, 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 I don't want to own a 30-year at all. Sell the 30 years because of inflationary concerns. TYX TNX ratio, this is a ratio that I follow. It's the 30-year divided by the 10-year. This tracks very closely gold prices. We are up in this ratio today, but we do have the longer end of the curve going up, the shorter end going down. It's basically flat dollar. I don't expect gold to be making too big of a move yet, but this generally gold follows this. When it uninverts, gold does real well. And most of the time during these uninversions, sometime out in the future, we can get a potential slowdown. And that slowdown could be fear in the market too, which causes a market sell-off. I don't think it's going to happen tomorrow necessarily, but it could happen over the next 6 months to a year. As this starts to uninvert, that is generally when a potential problem is seen in the markets, and the quote smart money, which is just insider information money, which is the banks, positioned before it. You'll see that move on up. TLT bond prices fell on the longer end. We're still in the channel. This is longer expectations for inflation. The longer expectations were dropping today, and perhaps we can get a move lower in the 2-year. The longer end of the curve goes up, and maybe more money printing is ahead of us. The 2 and 10, it is starting to uninvert, and it actually uninverted quite substantially today. We are heading towards that 1-to-1 relationship. That 1-to-1 relationship is where the 2-year equals the 10-year, and we get an uninversion where the 2-year goes below the 10-year. When that occurs, that's generally when things get interesting. So here's the one. This one came up, it tapped it, and then uninverted quite quickly. The problem was in March of 2020. That was most likely an event that was seen because you can see smart money positioning and having it come lower. It's like they knew that that was going to occur before it occurred. That also fell in May, April of 07, it started falling. We had the fallout in 2008. So it's not an indicator that we can necessarily time with precision, but it's an indicator that gives us a head up that says, you know what, a potential problem could be coming in the future. We inverted in 2000, it uninverted in December and in early 01, and that is generally where you want to be getting a little bit more hesitant with the market. So as this curve comes back down, that is where I would sense a little more hesitation. I would be more cautious in the market as this uninverts. And as it uninverts, my increase of caution would go up and up and up. Gold down a little bit. So we're down a little bit today, but I still think that this is located at a very good location with a bunch of tailwinds behind it. We could see a sell everything event if things continue to sell off in the S&P 500 and the NASDAQ. Silver also down a little bit, and it does look like we could come back a little bit more with the selling pressure today. But longer term, everything looks fantastic. We have broken all of those resistance levels. And with the yield curve uninverting, that's generally a tailwind behind silver. It doesn't mean that every day is up. What it means is that we have a constant pressure or wind or floating downstream, however you want to call it, is behind silver to go up based off of the conditions that the herd is about to be subjected to. Platinum up today about $4. We're still below that critical trend line. And then palladium is also up, and we're right at a particular support, long-term support level. So GDX, GDXJ, and SILJ, they all look like they could potentially head lower. We talked about that yesterday on the flag pattern and the potential move lower. That does look like it's going to play out here in the short term. And we have a lead-in, the squeeze up, and a inverted flag pattern that is breaking to the downside. for all of them. XAU to gold is still very well positioned. We are broken the longer term downtrend line for gold and silver mining companies to outperform gold, and that is still true. It doesn't mean that in the short term, if we see some selling pressure in the short term, that we should turn bearish. We should be ultra bullish, in my opinion, based off of the valuation relative to gold and the tailwinds that are behind precious metals at this time. It doesn't mean that we couldn't experience a short-term pullback if the markets do see a lot of selling pressure. Crude oil, despite the selling pressure in broad markets, was up today. We had a very strong report of inventory draws, but the momentum is still to the downside, and we didn't get a very good bounce today. We could still see some downside momentum, and the fear of the overall markets could still creep into crude oil. TTF gas up right at resistance, and natural gas in America down a little bit still. It's still well positioned to try to work its way sideways or higher. And the overall markets could obviously have an impact on the pricing of natural gas in the short term. Our boy XOP, yeah, you know me. I talked about this one and how it was holding up steady. If the overall markets continue to sell off and if oil continues to weaken, we could see XOP sell off further to the downside. And our boy OIH selling off 2.25%. The overall markets are going to have an impact on everything depending on the rate that they sell off at. If they sell off at a fast rate, people may need to liquidate whatever they can to raise margin calls, which is a possibility. But we're still above a lot of support, and it still looks good for both XOP and OIH. Newcastle Coal Futures up 0.25%, still very well positioned for sideways to higher move. We've got Sprott Physical Uranium Trust selling off about 3.5%, still looks pretty weak. We've broken down some of these support areas, and we could see further downside. And I know everyone is very bullish, and they look at the bullish picture, but the financial markets and what it's going through is a bigger determining factor of money flows than the individual sector itself. We've got URA selling off, and that looks like it will continue to sell off. It does not look strong. URNM also selling off, and URNJ continuing to sell off. And we could see further sell-offs in both of those. The momentum looks big. We've got copper continuing to sell off. That is also a very economic sensitive asset, and it is selling on off, going back towards support levels. We've got COPX also heading lower. That is as expected with copper selling off, and we do have support down here in the 37-ish range. Iron ore unchanged, just moving sideways, still looks good. We've got aluminum selling off just a little bit. We're right at support. We'll see if support holds. Momentum is to the downside. We've got nickel down 1%, momentum downside. And that will continue if we get further selling pressure in the markets. Mu selling off, right at resistance, selling on off a little bit, not a huge down day. Still holding in there and looks okay at the moment. Emerging markets selling off. We've got stronger yields on the long end. Dollar was basically flat, but we did get a lot of selling pressure across the board. KRE also smaller selling pressure today, but it still looks all right. TAN up a teeny bit, holding steady. We've got lithium down quite a bit, and that does look like it wants to continue lower, down at $38. REMX also selling off quite strong, still looks pretty weak. Heading lower. We've got BDI. BDI is right at support, looks okay. It's holding at the moment. XHB, with the 10-year going up like it did, we could see further downside depending on where yields head. This is very interest rate sensitive at this time because I think affordability is determining the sales of new home sales, and this is the home builders. Russell 2000 taking it on the chin a little bit, down 2.13%, right? Still above good support. It does look like we are getting a turn here where we could head lower. SPX selling off 2.3%. This could accelerate here. I'm in the camp that this is just mispriced, given where yields are at, given the slowdown, the unemployment rate, all of those things, and the valuation of where this stuff is at. I'm not a huge fan of the S&P 500 here, but I think we could see further downside, and the momentum here is quite strong. The NASDAQ is completely mispriced, in my opinion. The bearish engulfing pattern there is what started it. This is your follow through. We could see further selling pressure. The faster this sells off, the more it's going to tug on the sectors like commodities. So even though commodities could go lower with this, which is very possible, we need to make sure that we focus on the longer term and that, yes, this could be impacted. We can start here. We can come on up. There's an important trend line there. And we have basically squeezed up into the corner here. We could pop out of this to the downside. Now, this thing has gone up quite a bit. The market move, in terms of the cycle, your breakout of the cycle was here in 2010. And I do think we are getting close to a top of this cycle. That cycle is the real estate cycle that drives this. We come on up, and usually you go sideways during a real estate boom. Those are those sideways actions. And I believe that we are going to go in a sideways action, and this very well could pull back down, in my opinion. We'll see if that actually occurs. And it's difficult to time, difficult to call in real time. SMCI falling out of that pattern, heading lower. I think that this could accelerate. Yes, I was calling a top even back here, and we got one last blow-off move. I still think this is topping and that we are in a technology bust phase that could be beginning. And then we've got NVIDIA down 6.8%, two large bearish engulfing candlesticks, and I do think that this could eventually roll over here, which we could be at the beginning of. The reason I think we're at the beginning is multifold. It's multifold because we entered the recovery phase in this time frame here. This was the Goldilocks period. Your peak comes somewhere from this range. Now, the stimulus money could have been a false signal for the commodity bull market to be completely bottom. We're still in the bottoming phase, in my opinion. And then the tech stocks, I think, will be turning around at some point. They will head lower. Powell will most likely lower interest rates, and that will fuel the commodity bull market from there on forth with a lower dollar. That's my guess. BTC also just moving sideways today. Depending on how you look at some of these, and you look at the long-term pricing of Bitcoin, it does look like it could potentially be rolling over at some point. We'll see if that's true. That's what some other analysts have been charting. And then Ethereum down about 3% today. It is accelerating that selling pressure, and we'll see if there's any follow through with that selling pressure. We do have a high, a lower high, and a lower high. And the key important spot here is this resistance support level there at about 2863. If we blow through that, I would get much more bearish on Ethereum and also on Bitcoin and all these other cryptocurrencies if it does break below that, which I do think there's a possibility of that happening. But that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website. I did release the midweek update today. We have a platinum question and answer session coming up on Sunday at 5 p.m. If you want to join that, you definitely can, and ask me directly any questions that you like, or you can send me questions before the meeting. I'll talk much more in detail about all of what I'm seeing in the markets today and what forms my opinions on it. All right, guys, we'll catch you later. This is Finding Value.